How is it that you can be in the right direction at the right time? It doesn't take a sophisticated analysis to learn when the probabilities are that a downtrend is in progress. We're going to illustrate tonight why that little indication right there started putting us in the right position at the right time. This illustration right here will tell us when to have taken profits. And this right here will tell us when we should have started re-establishing short positions, because we can see the next bearish pattern setting up. The NASDAQ produced the same information. What should be very clear when analyzing candlestick analysis is it's all based upon common sense and some indicators that produce high probability results. A lot of people are afraid of using candlesticks because they think there's too many signals and they don't understand them. Once you learn them, there's only 12 major signals, 6 longs and 6 shorts, and about 6 or 8 patterns. That the reason we're learning these patterns is because the Japanese rice traders have illustrated how investor sentiment works effectively time after time based upon the same reoccurring result that occurs in human nature. Knowing what the market indexes are telling us gives us added fuel for shorting positions that are also telling us the same thing. This slow curve and the close below the T-line. And reverse engineering is, if you hear on the news that things are bad for the cruising stocks like we're seeing here in Carnival, this kind of confirms that the seller investment and investor sentiment is bearish to the point of where the most people sell, they start panic selling at the bottom. Same thing occurring in Norwegian cruise lines. So when the markets are selling off like this, you don't have to be uncomfortable with the market selling off if you had put yourself in short positions. As a matter of fact, your whole investment philosophy or dynamic changes. We're now not anxious, waiting for something to turn around. We're now getting prepared to watch for candlestick reversal signals so we can take huge profits at the bottom. But knowing the difference between a reversal signal and a non-reversal signal allows the candlestick investor to make some assumptions that put them in the right place at the right time. For example, notice the downtrend also was occurring in Schlumberger. But what did it do today? It was down big. However, look what the result was. There's your hammered doji in the oversold area. That is much more indicative that there might be a change of investor sentiment and that you could have a profitable bullish trade setting up. Why is that different than the other stocks that gap down? Like in Norwegian Cruise Lines? Because what did it do today? It sold off. It didn't do a potential reversal signal. That was a good indication there was probably more downside. This is why knowing what happens in each specific signal and pattern is very informative as far as when a reversal is about to occur. And the major advantage of having a chat room where everybody's kind of looking for the same signals and patterns puts us in situations like VIPS today. We were buying this going into the close or the later part of the day because here's a perfect illustration why you don't need indicators like RSI, Relative Strength Index, because we can visually see the relative strength where they were buying this stock when the market was trading off 1,800 points. The information built into candlestick analysis is so immense, and it's not complicated. Once you learn what the information is, which is usually based upon common sense implications, you now have much greater control over your own investment trading. You don't have to worry or depend on somebody else's recommendations. That'll be it. Hopefully we'll see some of you folks in the special session tonight where we can show how you take advantage or not have to ever go through an anxiety session of holding on to positions in big market sell-offs. That'll be it. See you in the chat room.